All right, so here's a new format for us. Try and put together a video for you so that you can follow along with what it is I try to say in the text messages that I'm sending out, and follow along, and hopefully it'll help you with a better understanding of what I'm talking about. The Dow here recently go through that head and shoulder pattern that I've talked about, and you'll see that the moving averages that I watch are significant in that you can spot areas of support and resistance by watching these closely and getting a feel for them. Once you have seen a few of them, they're not always the same. A stock will find its own heartbeat or its own rhythm, as I like to say. For example, right here, you've seen that the Dow liked to ride up on the 20-day standard moving average, which is the median of the Bollinger Band, and then it broke through. So we can see now, after a period of time of consistency, where the pattern is already making a change. We can see that as a reversal, and so it does that. It finds some support here at the 50-day moving average, and then the buyers didn't come in again, and we go down to the 150, which is our longer term trajectory, which is still positive, and we get some support here. Now we make a high here, we get a correction. Again, we're taking out the 50-day moving average, we're coming down, we're tagging, and we're holding on to that 150. We bounce back up here, but we failed to make a new high. Now this is where I thought we had the head and shoulder, but we got another move here, but failed to make a new high. So we ended up with a double peak, which is acceptable in a head and shoulder pattern. You can have more than one peak on a shoulder or on a head or what have you. And then we break down, and we're taking out the 50, we take out the 150, and we've go quite a ways. Now the market has sold off considerably, and we find that the volatility, as shown here in the widening of the Bollinger Bands, is considerable. So the stock here, or the underlying, then finds that these Fibonacci's start to act as areas of resistance and support, where I've drawn from the top to the low. You see where the Fibonacci lines at the 61.8% retracement. We have an area here of support. Well, not support, I'm sorry, resistance. You can see where the resistance is. Then here, recently, most recently, we've taken out that resistance, and we've gone up, and we've gone back to the neckline. Now, this is where I said we were getting a little bit long in the tooth, and it's probably, probably where it's going to turn around. But it didn't. We have that 150-day which we crossed, which is really a good thing, and you can see here that the 50 is converging with this 150 onto this Fibonacci. So we're getting an area of confluence for support. That being said, we did break out of this Fibonacci range through the neckline, and we made a new high up here, which I think was a very positive mood. And that's when I said, okay, this is nothing short of astonishing here, and that was quite unexpected, and that was that. Now we have this correction today, and I think we're going to see it continue, but it won't be I mean, the way over. So we could get a correction right to our support area here at the Fibonacci, and at the at around 11,664. I think you can buy this market. The volume supports that move up here to the upside. We've got accumulation as shown in the histogram. We're on the overbought side, but the accumulation is showing here in the Chaikin money flow as well. Again, these are the Bollinger percent in relation to the Bollinger Bands. We look at this 0.50 as the median, and the 1 is, say, 100%, and the 0 would be the other 100% on the other side. So we are definitely continuing this run. I don't see a double dip recession coming out of this pattern any longer. So hopefully you've enjoyed my video, and we'll try and get some more out there for you.